Scott Bauer, the CEO of Prosper Trading Academy, is joining us here to take a look at some of the economic data, market reaction to. Scott, let's begin with personal income and spending. There was a fair amount of lead up into this one, but not a lot of market reaction to. I guess you can see why. The number was pretty much in line with expectations. The core PCE month over month in line at 0.1, year over year at 1.4, and the PCE price index at 1.6. Again, personal income negative 7.1, basically in line.
It is basically in line, Ben, and good morning. And these are numbers coming off some really, really strong numbers that were reported last month. But like you said, right in line. So the market is taking this, pretty much as they should. It's really important, though, to watch the consumer patterns. We talk about this a lot because the personal income number, that is just so closely correlated with consumer spending, which, accounts for the overall majority of economic activity.
All right, Scott, so should we be concerned? You mentioned the really strong number last month. They actually revised that up a bit to 10.1% from 10%. Not a major revision, but the last month, again, very positive, as you mentioned. This month, down 7.1%. Is that a concern? We oftentimes talk about one data point does not a trend make.
No, I don't think it really is. However, we don't want to see that continue.
Okay.
We want to see, especially for the next report coming out, we want to see that number tick up, because what that will mean is that the consumer is buying into, no pun intended, but buying into the reopening, buying into vaccinations, getting more comfortable with the economy getting somewhat back to normal.
All right, I'm looking now that income number, the first negative number after two positive. The number here in terms of this decline of 1% is just negative now after seeing one positive uptick. Again, that prior number was that 2.4. I do want to point out that got revised up to 3.4%, it looks like, and again coming in down 1% here right now. Scott, we had a couple other numbers here that just got released as well. Wholesale inventories and retail inventories. It looks like wholesale inventories coming in at 0.5%, retail inventories at 1.2%. A lot of focus on trade this week, not necessarily in terms of these data points here, Scott, but certainly with this Suez Canal blockage and this cargo ship that's creating some waves, so to say, in the wake of.
No doubt about it. And it looks like that's going to extend on.
I heard. Middle of next week.
Than had anticipated. But you know what? The market, Ben, the market always seeks the correct level. And I think we're finding that. The initial shock to that we saw earlier in the week has now ebbed a little bit. It's not a great thing that this is going to be blocked for the next week or week and a half, but the market will adjust to it. Yeah, I think Scott makes a real good point there in terms of sometimes we kind of subject price activity to our own thoughts, desires, wants, needs, and ideas. Price is king. It's pretty clear when you hear that statement, what matters. It's not our thoughts and our expectations. Scott, the one question I have about this blockage is we oftentimes talk about this kind of domino effect that could be created. I heard from Caterpillar recently. They're saying that that it's creating some supply constraints for them. I mean, I guess what I'm thinking is all of this added up. I mean, we've heard Fed Chair Jerome Powell that some of these inflation pressures are transitory, but if conditions continue to persist, they may not be as much so. No doubt about it. And I think when he is saying transitory and he's looking at, some of those inflation concerns really calming down a little bit, he's posing a best case scenario in my book. And things like this are going to happen, Ben, like you just said. And this is not necessarily just a one-off. I'm talking about the blockage in the Suez Canal. Things like this are going to pop up all the time. But if they continue to do so, that is going to put a world of hurt on the inflation pattern that we have right now. And that could really make or help the Fed decide to maybe accelerate things faster than they'd want to in terms of what they're going to do with rates.
Okay, in terms of putting a world of hurt on, that certainly was the case in terms of what we were seeing with rates recently. It concerned investors. It slowed momentum. I guess I'm wondering right now, have we seen the top of the mountain? We seem to have eased off some of those upper levels a bit. We're talking 1.75% for the TNX. We're talking 2.5% for the TYX. But Scott, are we going to continue that momentum? And ultimately, should we be prepared for more to come? Or do you think that now we're going to kind of ease off, and as you mentioned, the market's going to kind of just work its way back into or find that level ground, that level playing field?
I think what we're going to see, Ben, is just a higher range. So, we had this range in the TNX for the longest time of, let's even call it, 80 basis points to 110 or something like that. Now with that upper level that you said of 175, I wouldn't be surprised if we see a range over the next probably 4 to 8 weeks, maybe 150 to 175. Maybe we touch 180 also. However, what I see is the market reaction to these changes probably will not be as severe as what we have seen, over the last several weeks.
Scott, what does this mean for the U.S. dollar then? It's been firming some just shy of the 93 level this week.
Yep. Yeah, it's at its highest level since early December. And much of that is based on the hopes of vaccinations, the economic data that has been coming out. And what's really interesting, though, is when you compare the dollar to what's going on with the euro here, if you had to break it down and you had to explain one thing, it really has to be still the pandemic, COVID, and vaccinations. And that's why the dollar is so strong, especially against the euro. But yeah, the dollar is got a lot of tailwinds to it right now, and especially against most major currencies, except for the British pound, which is still really hanging in there pretty strong.
Scott, how about the Japanese yen? Have you seen the slide? Weakening, to say the least. I'm imagining this is behind some of the bid we're seeing in the greenback.
No doubt about it. I mean, that is at what, 109.5 almost, which is the highest since I want to say probably the middle of summer, last summer here. So yeah, that is a major move, and that is, I think, more based on what's happening here and how weak the dollar had been in the height of the pandemic last year, and with the hopes of the economic, reopening, and quite frankly, the recent stimulus that passed. I mean, that also added another tailwind to the dollar.
Scott, we wanted to get your thoughts on Bitcoin, and then we'll let you get out of here and get on with your busy Friday morning. We've recently seen it come off that all-time high up through the 60,000 level, but still holding up above some key support right now. Some interesting stories this week. Elon Musk talking about how we can go out and buy our Teslas now with Bitcoin. I was hoping that was going to happen. That's a game changer for me. I'm not sure about you, but talk to me about what's playing out here in terms of crypto, because on the other hand, we had some kind of stiff comments from Fed Chair Jerome Powell earlier in the week. He was talking about how basically he thinks that we need to wait before we adopt. He's kind of dialed back some of the expectations that central bank has related to crypto adoption.
So I think he's playing the cautious father part, if you will. He is not in a position to say, yes, we are going to accept this. This is accepting right now, because if he gave a ringing endorsement, we would probably see Bitcoin at $100,000, $150,000. And I mean that. And I think that would be completely irresponsible. But then you see what you just talked about with Elon Musk, and that's probably just the tip of the iceberg. And, Elon obviously gets a lot of headline news for pretty much anything he says. But that is really important, because if that starts to pick up a little bit, Ben, and you and I are both in the same camp, I hope that does happen. If that starts to pick up, you are going to see even more adaptability and more daily consumer usage of Bitcoin. In terms of the technical areas of Bitcoin here, yeah, we're well off those highs. However, that massive support level, whether you want to call it psychological or whether it's real technical support around the 51,000 level, the whales came in again and started buying it up. So that is now a range, let's call it 50 to 60, much like what we were talking about earlier, with TNX. We now have this range in Bitcoin of 50 to 60.
Okay, but on the other side of the Bitcoin, you've got billionaire investors like Ray Dalio and others saying, hey, we could actually see this thing just outright banned in the near future. And he actually predicts that it will be at some point. I mean, could they really just write this off the books one day with one full swoop?
Well, Ray Dalio is a lot smarter than I am. However, I think that is a very, very low percentage.
Okay.
Can that talk be out there? Absolutely. But
okay.
Much like the discussion of adopting ETFs, right, and the regulatory bodies, taking so long to get into that camp, I think on the other side of what Dalio is saying, to just completely ban it is absolutely not something that can happen overnight.
All right. Gives us something to keep an eye on here. Scott, we'll continue to watch crypto, the currencies, rates, treasuries, and some of the economic data as it becomes available to us. Scott Bauer, thanks for sharing part of your Friday morning with us. Ladies and gentlemen, Scott is the CEO of Prosper Trading Academy, and, well, we've covered the fundamentals pretty well.